Welcome back to Money Mastery Now, the channel that helps you take control of your money, one smart habit at a time. If you want to master your budget, crush debt, and build lasting wealth, you're in the right place. Let's dive in. Think using a debit card is safer, or that credit cards are dangerous? Let's settle it once and for all. You see, most of us grew up hearing horror stories about credit card debt. Maybe it was a friend who racked up thousands of dollars in interest. Or maybe it was your own first experience swiping freely, then getting hit with a statement that made your stomach drop. And on the flip side, maybe you've had that moment where your debit card was charged for something unexpected, and the money vanished instantly. No buffer, no warning, just gone. These moments create fear. They make us cautious. But what if I told you that the problem isn't the card, it's how we use it? In this video, we're going to break down the real differences between credit cards and debit cards. We'll talk about what actually protects your money, what builds your credit, and most importantly, what can help you grow your wealth over time. So if you've ever wondered which one is better for your financial future, stay with me. The answer might surprise you. So let's start with the basics. What exactly is a debit card? A debit card is a payment card that pulls money directly from your bank account. Every time you swipe, tap, or use it online, you're spending your own money instantly. Think of it as digital cash. One of the biggest advantages of using a debit card is that there's no debt involved. You can only spend what you actually have. That makes it easier for a lot of people to control their spending. No surprise bills at the end of the month. No risk of running up interest. Debit cards also tend to be more beginner-friendly. If you're just starting to manage your finances, they feel safer. You see your account balance drop in real time, which helps keep your budget top of mind. But there are some serious limitations. First, debit cards do not help you build credit. They don't report to credit bureaus. So if you want to qualify for a mortgage, a car loan, or even rent an apartment one day, your debit card use won't help you get there. Second, debit cards usually offer less protection when it comes to fraud. If someone steals your debit info and drains your account, it's your actual money that disappears. With a credit card, you have more time and legal protection while the issue is investigated. So yes, debit cards can be simple and safe, but they don't do much to move you forward financially. Now, let's talk about credit cards. A credit card is not your money. It's borrowed money from the bank or the card issuer. Every time you swipe, you're taking out a short-term loan. Then, at the end of the month, you're expected to pay that amount back either in full or with interest. One of the biggest advantages of credit cards is transaction protection. If your card is stolen or misused, you're not liable for the full amount right away. Credit cards also offer better fraud protection and dispute resolution than debit cards. Another major perk is rewards. Many credit cards offer cashback, travel points, airline miles, or store discounts. If used responsibly, these benefits can really add up, especially for everyday expenses like groceries, gas, and bills. But there's a big downside. Credit cards make it easy to overspend. Because the money isn't leaving your account right away, you can feel like you have more than you actually do. And if you only make minimum payments, interest can pile up fast. Some cards charge 20% or more in annual interest. There are also late fees, annual fees, and penalties that can hurt your finances if you're not careful. So credit cards can be powerful tools, but only if you understand how to use them wisely. Let's break down some of the biggest myths about credit and debit cards. First, the myth that credit cards are dangerous. The truth is, credit cards are only dangerous when misused. If you carry a balance, pay late, or use them to buy things you can't afford, yes, they can hurt you. But when used with discipline, credit cards offer rewards, protection, and a path to better credit. It's not the card that's dangerous, it's the habits behind it. Second, the idea that debit cards help you avoid debt. That's partially true. Debit cards pull directly from your account. So you're spending what you have. That can be a good thing for self-control. But here's the issue. Debit cards don't help you build credit. So if you're renting, applying for loans, or looking to improve your financial standing, you're missing out on the benefits that a healthy credit score brings. Third, there's the myth that rich people avoid credit. Actually, it's the opposite. Wealthy people often use credit strategically. They leverage credit cards for business expenses, earn travel rewards, use 0% interest offers, and maintain high credit scores to access better loan terms. The difference is they pay their balance in full and treat credit as a tool, not a trap. The bottom line, it's not about choosing one card over the other. It's about using each one intentionally. Let's talk about one of the most important factors, security. When it comes to fraud or unauthorized transactions, the difference between a debit card and a credit card can be huge. With a debit card, the money comes directly out of your checking account. If someone steals your card or your information and makes a transaction, that money is gone immediately. You may eventually get it back, but it can take days or even weeks. In the meantime, your account is frozen. Bills might bounce, rent might be late. That's real stress. Now compare that to a credit card. With most credit cards, you're protected by zero liability policies. That means if there's a fraudulent charge, you're not responsible as long as you report it quickly. And because the money isn't pulled from your bank account, you're not left without funds while things get sorted out. Let's look at a quick case study. Imagine your card is compromised and someone makes an $800 purchase online. If it's your debit card, the $800 is pulled straight from your account. Your bank may investigate. But while they do, your funds are frozen. You might be without that money for up to 10 business days. If it's your credit card, you report the charge, and the card issuer usually removes it from your balance right away. You're not out any money from your actual bank account. In short, when it comes to fraud protection, credit cards offer a stronger safety net. Let's talk about building credit and why it matters more than you think. Your credit score affects more than just borrowing money. It can determine whether you qualify for a mortgage. It impacts the interest rate on your auto loan. In some cases, it can even affect your ability to rent an apartment or get hired for a job. Here's the key. A debit card does nothing for your credit. No matter how responsibly you use it, your behavior isn't reported to the credit bureaus. It's invisible in the world of credit scoring. But a credit card, when used wisely, is one of the most powerful tools to build and improve your credit score. When you use a credit card and pay it off in full each month, you show lenders that you're responsible, that you can borrow money and pay it back. Over time, that behavior builds a strong credit profile. Strong credit unlocks wealth-building opportunities. You qualify for better loan terms, lower interest rates, and can even leverage credit to invest in assets like real estate. Think about it this way. A good credit score is like a financial passport. It opens doors. A poor or non-existent score, it closes them. So if you want to build real financial power, credit, not debit, is the tool that gets you there. Here's something most people don't realize. Smart credit card users can actually make money just by using their cards wisely. We're talking about cashback, travel points, extended warranties, even travel insurance. All of these are perks that many credit cards offer. Let's break it down. Cashback means you earn a percentage of your purchases back in cash. It could be 1%, 2%, or even 5% in certain categories. Over a year, that can easily add up to $500 to $2,000 just from spending money you were already going to spend. Travel rewards are another major benefit. With the right card, you can earn points or miles that cover flights, hotels, and upgrades. People who travel smart often fly for free just from using their card for groceries and gas. Then there are hidden benefits like extended warranty protection on electronics, or trip cancellation insurance when you book travel with your card. These perks can save you hundreds, sometimes even more. Now let's compare that to a debit card. Most debit cards offer no rewards, no cashback, no travel perks, no buyer protections. You're spending your own money with fewer benefits. Of course, these credit card perks only matter if you pay off your balance in full every month. If you carry debt, the interest can wipe out the rewards. But if you're disciplined, these benefits aren't just nice, they're valuable. Credit cards, when used wisely, can actually make your financial life easier, cheaper, and even more enjoyable. Let's be real. Credit cards come with serious risk, especially when used without control. The biggest danger: spending money you don't actually have. It's easy to swipe a card and tell yourself you'll figure it out later. But later often comes with interest rates of 20% or more. That's where the real trouble begins. It starts small. Maybe you can't pay off the full balance, so you make the minimum payment. That keeps you in good standing, but behind the scenes, interest is piling up fast. This is what's known as the minimum payment trap. You feel like you're managing the debt, but in reality, you're just paying to stay in debt longer. Let's say you owe $2,000 and only make the minimum payment each month. At 20% interest, you could end up paying more than $4,000 over time, and it could take years to pay off. This is how people with good intentions fall into bad debt. That's why the number one rule for credit card use is simple. Only charge what you can pay in full each month. If you can't afford to pay it off when the bill is due, don't swipe. Period. Use the right way. A credit card is a tool. Used the wrong way, it becomes a trap. It's not about avoiding credit altogether. It's about using it on your terms, not letting it control you. Let's bring it all together with a real-life style comparison. Meet Anna. She's cautious with money. She uses only a debit card because she doesn't want to go into debt. She always pays with what she has. And she avoids credit like the plague. Sounds smart. Right. But here's the problem. 5 years in, Anna has no credit history. When she tries to lease an apartment or apply for a mortgage, lenders hesitate. Without a credit score, everything costs more or gets denied entirely. She also missed out on thousands of dollars in rewards, travel protections, and fraud benefits. Now, meet Jake. Jake also started with a debit card, but he wanted to build financial tools for his future. So, he got a credit card and used it wisely. He charged his regular expenses, paid the balance in full each month, and never missed a due date. Over 5 years, Jake built a credit score of 780. What did that do for him? It gave him access to low interest rates on a mortgage. It saved him thousands on car insurance. It helped him qualify for premium credit cards offering cashback, travel perks, and extended warranties. Jake earned about $1,200 per year just from credit card rewards alone, all for spending the same money but smarter. Same starting point. 2 different tools. 2 very different outcomes. This is the power of understanding not fearing credit. Used right, a credit card doesn't make you go broke. It builds your financial future. So, when should you use a debit card and when is it smarter to use a credit card? Let's start with debit. Use your debit card when you're just starting out with personal finance. If you're still learning how to track spending or avoid debt, debit gives you a clean, simple system. You're spending your own money. No surprises, no bills, and no interest charges. Debit is great for daily expenses where you want to stay within a strict budget like groceries or small local purchases. Now, what about credit cards? Credit cards are powerful, but only when used with intention. Use a credit card when you have stable income, a working budget, and the discipline to pay your balance in full every single month. That's key. Why? Because when used correctly, credit cards do 2 things debit cards can't. 1. They help you build a strong credit history. That means better rates on mortgages, car loans, even cell phone plans. 2. They reward you through cashback, travel points, and buyer protection benefits. The rule is simple. Debit card for control, credit card for leverage. Use debit when you want to limit spending. Use credit when you're ready to level up your financial life without falling into debt. The real secret: it's not debit or credit. It's knowing which tool to use and when. Choosing the right credit card can make or break your financial strategy. So what should you actually look for? First, no annual fee. There's no reason to pay just to have a card, especially when so many great options offer solid benefits for free. Second, cashback. A good card gives you at least 1.5% back on all purchases. Great ones go up to 5% in categories like groceries, gas, or online shopping. That's real money coming back into your pocket. Third, purchase protection. You want a card that gives you coverage if an item gets lost, damaged, or stolen. Some even extend the manufacturer's warranty automatically. Fourth, built-in expense tracking. Many cards now offer tools to categorize your spending, set budgets, and alert you when you're close to your limits. This turns your credit card from a spending device into a financial planning tool. And finally, check for mobile app quality and customer support. If you ever need to freeze your card, dispute a charge, or redeem rewards, you want it to be fast and easy. Bottom line, the right credit card doesn't just help you buy stuff, it helps you build credit, save money, and manage your finances smarter. Choose wisely, and your card becomes a wealth-building tool, not a debt trap. Credit cards can be powerful tools, but only if you use them with discipline. Here are the daily habits that turn your card from a trap into a tool. First, set up automatic full balance payments. Every month, no exceptions. This one move eliminates interest charges, protects your credit score, and builds trust with lenders. Second, review your statement weekly, not just at the end of the month. Check for unfamiliar charges, spot patterns in your spending, and keep yourself aware of how your money is flowing. Third, use financial tracking apps. Tools like Mint, NerdWallet, or Credit Karma help you visualize your debt, credit score, and spending trends all in one place. They take 5 minutes a day and can prevent hundreds of dollars in mistakes. And most importantly, never use your credit card to feel rich. Don't swipe for ego. Don't spend just to keep up. Use credit for convenience and growth, not validation. Remember this: good credit habits aren't about rules. They're about rhythm. Build that rhythm now, and your credit card will become a silent partner in your long-term wealth, not a financial burden. Credit cards are powerful tools, but only in disciplined hands. Let's wrap this up. Debit cards are simple, safer for beginners, and they help you stay within your spending limits. If you're rebuilding your finances or just getting started, debit gives you structure. But credit cards, when used wisely, can help you build real wealth. They grow your credit score. They offer protection. And with the right habits, they reward you for spending money you would have spent anyway. So here's the truth. It's not about credit or debit being good or bad. It's about how you use them. Want to build wealth? Learn how to control credit before it controls you. And if this helped shift your thinking about money, hit subscribe and share it with someone who still thinks debit is always safer. Your financial future is built swipe by swipe. Make each one count.